Is Alibaba undervalued? I'm your host, David Scheuer. This is StockerFinance, and let's get into it. So, the price target I'm putting on Alibaba is $340. And let's keep watching to find out why this is. So, first off, let's get into the fundamentals. So, the market cap currently is $587.52 billion. Its high today is 220. 52-week high, though, is 230, so it's still below there. It has 100,000 employees, just over, actually, around 102,000 employees. Its PE ratio is 26.92, a low today of 215.35, and a 52-week low of 150.57, so substantially above its 52-week low. It's headquartered in China. It's founded in 1999. And next thing I want to look at here is its stock prices. Looking at the graph here, not much. The reason we're looking at this is just to show that it actually has recovered from its low during the pandemic. It went up about 24% since then. The whole market has really recovered since then, so this isn't anything too unusual. Then we're seeing still below about 5% below its 52-week high there. So there's a little room before it passes its 52-week high. The next thing we want to take a look at is users. Now, Alibaba has an insane amount of users. Its annual active customers, just over 700 million, and its mobile monthly active users is over 800 million, approaching 900 million. It's growing very steadily. Now, for this next part here, I'm going to look at all the fundamentals of Alibaba, but I'm actually going to compare it to Amazon. The reason I'm comparing it to Amazon is because they're very similar companies. Alibaba's it's kind of just like the Amazon of China in a way. And I'm comparing these two companies because when I do analyses, comparing fundamentals of two companies that are similar can give you an estimate if your company that you're analyzing is undervalued or if the other company is simply overvalued. So we can go ahead and take a look at this. So, first off, let's look at the revenue segments. Now, Alibaba is currently doing just over 15 billion in revenue. Obviously, most of it is from the e-commerce. Then you have some from cloud computing, digital media and entertainment, and other. You're going to notice that this graph, where the spikes are, how it's segmented out, is very similar to Amazon's here. So you have online stores, and then you have some physical stores, which Alibaba does not have. Some third-party seller services, which goes in the same thing with e-commerce there. You have the subscription service, you have its cloud computing, and then you have other revenue as well. But if you notice where the jumps are, etc., are all very similar. And that has to do with holiday seasons, it has to do with when shopping is more prevalent online, etc. And that's why these graphs are going to look very similar. And you're going to notice the same thing with revenue and operating income, same thing as well there. Now, one interesting thing here, and this is when it starts to get kind of weird, is when you get into net income. So net income for Alibaba it was around 6 billion, then the pandemic hit and it really got hurt by that. So it was actually under 2 billion, probably around 1 billion there. But if we look at Amazon's, it's never been above 3.5 billion. Let's go back to Alibaba really quickly. Just last quarter, it was over 6 billion. Despite its revenue being significantly lower than Amazon, its net income is way higher than Amazon's. I mean, nearly double. In fact, it was more than double at times. It's been over 10 billion just a couple quarters ago. But the pandemic has really hurt it. So for a lot of these fundamentals, I'm going to be using its pre-pandemic numbers since that's what it's starting to return to. And I believe it's kind of starting to fully recover from that pandemic numbers there. Whereas Amazon wasn't as affected by the pandemic. It was a little bit, but we're still seeing significantly lower net income. And that all has to do with the profit margin. So if we look at Alibaba's profit margin, it usually was around like 30%, a little over 20%, but then the pandemic hit and it dipped below 10%. But if we look at Amazon's profit margin, it's below 5%. So Alibaba, even though its profit margin crashed during the pandemic, it just crashed down to what Amazon's profit margin was. And pre-pandemic, Alibaba's profit margin was substantially higher at 20 to 30%, even higher than that during certain quarters. So the profit margin disparity here is incredible between these two companies. I mean, Amazon's doing so much more revenue, but its net income is so much lower because its profit margin is so much lower than Alibaba's. Now let's look at operating expenses as well. And you're going to notice something similar. Alibaba has substantially lower operating expenses. And I mean substantially. Amazon is over 25 billion, approaching 30 billion in operating expenses, whereas Alibaba is still less than 5 billion in operating expenses. I mean, that's ridiculous.
I think a lot of that has to do with the fact that Amazon's trying to create a lot of TV content. They're building a lot of new factories. They're building a lot of warehouses. They're expanding a lot. They're investing a lot of money, etc. But if we go to growth here as well, I thought we were going to cash, but let's go ahead and talk about growth. So if we look at growth here, and you'll see these lines declining. And if you've never looked at a chart like this before, that doesn't mean they're losing growth, that they're declining. It just means their growth isn't as large. So instead of growing 30% a year, they're only growing around 10% a year right now. And you've kind of seen a slight decline for the past few quarters in Alibaba's growth there, but it's still not too bad. And if we look at Amazon's, we've also seen kind of a decline in the past few quarters here, but it's actually recently picked back up. And I think that has to do with it just taking over during the pandemic right now. Now, one interesting thing here is cash. So remember the profit margins, the net income, all that stuff. Alibaba has over $50 billion in cash. Now, Amazon, this is cash and its short-term investments. Just under 50 billion, or right around 50 billion if you average it out with the last quarter. So they have about the same amount of cash, but Alibaba's doing substantially more net income, has substantially higher profit margins than Amazon, substantially higher, and substantially less operating expenses. So the next thing I want to look at now is population, because all these companies, or both these companies here, and a lot of these online companies, they operate based on how many users are going to their sites, how many people are using their platform, etc. As we saw, Alibaba was approaching the 900 million mark for users on monthly active users, and around 700 for customers. But if we look at the populations here, you're going to notice why they're doing so much. That's because Asia has a population of 4.6 billion, which is more than North America and Europe combined. It's also growing at 0.86, substantially faster than North America and a little bit faster, or actually substantially faster than Europe as well. So it's growing faster and the population's way, way, way larger. Now, I know a lot of you may be saying, well, Asia covers a much larger landscape. It's currently underdeveloped. It goes into India, etc. Well, even if we used Southeastern Asia, or even if we just use Eastern Asia, it's 1.6 billion, which is still more than Europe and North America's population combined. That's crazy. In just Southeastern Asia, which is largely China and that area, is still a nearly double, or actually it just is about double, the United States population, which is Amazon's largest market. So it's pretty incredible that as all these people in Asia and throughout Asia go into the middle class and start going into the upper middle class, especially in China, we're going to see more and more of them using Alibaba, and we're going to see more and more of them spending more money, which means Alibaba is going to directly profit from that. We're going to see more companies using their cloud services, etc. And that's one of the next things I want to talk about here is Alibaba Cloud sees a 62% growth in revenue to 5.6 million, driven by public and hybrid clouds. This is an article here. And a part that I want to just kind of read here is Alibaba's cloud is the largest cloud computing service provider in the Asia-Pacific region, as measured by market share for its IaaS, Infrastructure as a Service, and IUS, Infrastructure Utility Service. Cloud computing revenue grew 62% year over year in the fiscal year 2020 to 5.651 million, so just approaching $6 billion there. Primarily driven by increased revenue contribution from both our public cloud and hybrid cloud businesses. Now, you also have to remember here that Amazon's facing a substantial amount of backlash from the US government, whereas Alibaba is pretty much backed by the Chinese government. So the power that both these companies have is very different. Although Amazon's a powerful company, it's facing a lot of scrutiny, whereas Alibaba's really not facing much scrutiny in China. In fact, they probably promote it, and the government most likely backs it and does a lot of different things with Alibaba, I would imagine at least. And then we're going to look into the fact that Amazon isn't even allowed in China. And what happens is many of the products, as you've probably seen by a lot of these drop shipping videos on YouTube, which are very annoying in my opinion. But anyways, Alibaba, a lot of its products are sold directly on Amazon. So now, if we go ahead and we just do a summary, revenue, 15 billion, Amazon's revenue, 70 billion, net income, 5 billion, pre-Rona, remember that. Net income, 2.5 billion. That's pretty steady. The profit margin, normally 20%. Again, I'm trying to use the pre-Rona because that's what it's returning to right now, and not generally just the coronavirus pandemic numbers there because it was just so, it's such an outlier. But the profit margin is usually around 20%, and Amazon's profit margin is around 4%. its cash is the same as Amazon, just about 50 billion, and its population market size is substantially larger, about 4 times bigger, more than 4 times bigger than Amazon's population market size. And yet, its market cap is half, less than half, of what Amazon's is. So the reason I put that $320 price target on there is because all that is Alibaba's price at $1 trillion. I think Alibaba is definitely a $1 trillion company, or will be $1 trillion very soon. I think it's currently undervalued, actually, especially when we compare it to Amazon, and how much better a lot of its fundamentals are than Amazon, and how much larger the market is for Alibaba compared to Amazon. So it's also facing substantially like scrutiny, etc. So anyways, I'm bullish on Alibaba. I think it's currently undervalued. And yeah, it's pretty interesting to make this comparison here. Let me know what you think, though. Criticize it. Do whatever you want. I'd love to hear your opinion. Make sure to check out these videos as well. And please subscribe, guys. I really want to hit 1,000 subscribers before the end of summer. It would mean everything to me. Thank you so much. And check these videos out as well. And I'll see you guys in the next video. Peace out.